is going to be a quick little scan for the week, kind of a further recap of what happened last week and what I like going forward. So I think the last discussion I made was I think it was Thursday. I think it was Thursday. Might have been Wednesday, but inside week, lots of volume, which is not necessarily a good sign. And it's my conviction is still there short side, right? We've had a range build out, and we now have what could potentially be developing as far as the last point of supply, right? And this is kind of just going along the lines of this daily distribution that we've been developing above the quarter one highs at 613. That sparked the 21% decline down to sub 500 in April. So, I mean, what's happening here is we continue to see the exhaustion build out. We see internal higher lows found, and it's really just a waiting game, right? There's not many opportunities to capitalize short side here, especially on leveraged exposure via options. And we have, a preliminary kind of distribution at 626. We see the volume pour in on the 16th. The rally, continued exhaustive look, right, where there's just not a structurally sound bid. The volume is not necessary, and the patterns as far as volume price analysis are not very harmonic. We don't see strong pop, weak effort from sellers following that and subsequent consolidation, reclaiming previous kind of pivotal points within this chart. We more or less just see continued exhaustion into what is finally a massive footprint, right? And I mean that on a weekly and daily scale. And what I mean by that is we finally see sellers, essentially, we finally see that leg to the downside happen with ease and aggressiveness and at a pivotal time off of some binary events being those reports, right? We see the exhaustion in the last week, right? We put in this weekly high at 637. We continue to see a larger seller the beginning, not a larger seller necessarily, the beginning of last week into the Fed meeting, or not last, it was last week, the week of the 27th or 28th, into the Fed meeting where we see a very aggressive breakdown and then stronger close into these reports being Microsoft and Meta. You don't really have an edge as far as positioning into those shorts or into those reports, in my opinion. It's more or less seeing if something can stem from those volatility and liquidity brought in through earnings reports, right? On big time names after extensive rallies. And that's what we see, right? We have a really aggressive shakeout off of the Fed meeting on the 30th, which is very interesting to me. Not this week, but the week before, week of the 28th. We see a big time breakdown and shakeout kind of before the gap up, right? And that, that's not necessarily a surprise. There's a lot of kind of selling that happened off of this Fed meeting, off of the Powell speech that was then subsequently absorbed, and you can't really justify taking a position necessarily into the Fed meeting or into these reports short side. But what we finally get after is, an exhaustive, not even exhaustive. I think this was a little bit less than a 1% gap up and a massive breakdown, and then continuation into the following session on the 1st for a 3% move from Thursday highs to Friday lows, right? Now, when this happens, and it happens so quickly, you finally see the ease of the aggressiveness from the sellers, and we finally see the tape beginning to flip. But you can't necessarily justify continuing to take short exposure after this move, right? There's a good intraday position here. I don't even want to even discuss potentially trading this continuation because it's all speculative. The January position works, but now what we could be developing is a lower high and a change in character, right? We see the gap up on Monday. We see the volume diminish, and we see a seller within the 632 spot Don't really get any follow through off that. A continuation the next day into a gap up on Thursday that's faded. A really, really clean move after that. um, and there was also a dark pool that was put in on Tuesday pre-market right around that 637 spot. And then the continuation on Friday, right? And this all leads into talk about vol and VIX. Well, I guess not same thing almost. But the VIX pop as well. There was a lot of late shorts that were trapped, and then a lot of puts that were crushed following this move. But when you analyze after an aggressive move leading into the first week of August, where those flows begin to show their hand into the expiration the next week, this week, um, we have an inside bar on a very, very weak bid with the highest weekly volume coming into the digestion of this massive footprint candle and a gap up and a failure, and then some very weak continuation the following session where there's really more or less a passive seller at the highs in comparison to what you would want to see if you're long as far as like a clean structure. This is a very, very notable bearish divergence as far as just volume price action goes, right? Where the volume comes in, how it comes in, and the time frame. This is not a surprise. There's a clean short this day. I do think that the September position is justifiable. I think we will pull into this in log and potentially retest these highs within the month of August. But you can't necessarily justify continuing to get super, super aggressive following this massive breakdown and then the subsequent time frame opening up for those beta charm flows to hold a lot of relevance to the movement behind the financial markets, the equity markets specifically. And it's the same thing on QQQ. Not necessarily an inside week, but we see the gap up, the reclaim of the 538 or 558.88 spot, which is the Friday open. And then the continuation, we see a notable influx of volume on the Tuesday candle, but there's a lot of volume that poured in at the low of day. SPY specifically, right? A big anomaly in terms of the highest volume of this session in comparison, without counting the closure. So there's not so much of a justified continuation short side here, especially because of the time frame, like I said. And it's the same thing on Qs. I like SPY a little bit better because it's a little bit less extended from the previous highs as far as a short side target goes in the month of August and September. But the same kind of concept. We're digesting this massive imbalanced move within this. This was a little bit 4%-ish breakdown from high to low. And then we see the seller on Tuesday, the volume pouring at the lows. Those are swept. The continuation in Wednesday where no structurally sound bid, and then the exhaustive gap up. We melt down into a stronger close, and then kind of a similar price action on Friday's session where you don't see much volatility, more or less just a float into a weekly closure just beneath the previous weekly candle high. So there's just nothing that has frayed me away from the positioning that I kind of deem optimal right now as far as the January exposure into September's. My outlook for the month of August is that we should fill this gap, take out these weekly lows from the week of the 28th, and ideally retest the previous all-time highs before potentially putting in what can be our kind of test of supply, right? Where we see, or I guess this would be just the test of demand, whatever you want to call it. See how the buyer off of the previous highs acts, and if we have that kind of, weak pop into the September expiration, that'd be pretty appealing as well. So next week we have CPI on Tuesday, if I'm not mistaken, and then opex on the 15th. The expiration is the 20th, and PPI on Thursday. I think that something's going to happen. I think we're going to get some kind of move, whether it's catalyzed off CPI, whether it happens post expiration. And I think we're going to fill the in-log from this week, right? Like I said, an inside week on an increased volume with just analyzing the highest daily volume that we saw is not necessarily a good look in my opinion. I don't really like this long at all. I think the September position is justifiable, but you have to understand windows to get aggressive short side and windows to back off. And definitely after the way that this move looks and how VIX pops from $15 to 21, 22, 50% in 2 sessions, we're going to have a lot of puts get crushed. We're going to have a lot of late bears trapped, and that's exactly what we get with the gap up and the continuation the following session, or the following week, right? But everything still stands. Everything still stands. I justify the short position 100% as far as continuing to trade this or continuing to see signs of distribution on not only a shorter but a higher time frame scale of things. And I mean, I like the short side. Right? I have a lot of red flags, right? And the biggest red flag, in my opinion, is going to be XLF. So obviously, following the 3.8% decline last week off of the all-time highs, we have a little bit of a volume anomaly here, which initially could potentially fray you away from wanting to short this. But another name that could be developing finally after a lot of preliminary signs of distribution. We see the exhaustion in May. Notable underperformer following the May 23rd, like the decline into May 23rd, the rally, the exhaustion at the highs, the breakdown. We find the higher low in mid-July, continue to build out this exhaustive looking top into the aggressive decline on the 1st, right? And we have this gap that we're sweeping, the July 16th lows that are being swept. Remember the volume backing the July 16th lows, the highest since April 9th, April 9th or 10th. And then we have what looks to me like an hourly redistribution back into this gap, back into the golden pocket range, and back into, or not back into, and potentially developing a path of least resistance 350, 132, 250, 82, right? A 50% decline, or 50% remainder of 50 cent remainder of this gap has not been filled. We see a really aggressive failure on Thursday's print, and then kind of an inside bar that's put in on Friday. I'm not surprised. I do think that the draw is going to be to the full gap fill. We haven't even tapped the 0.5. But I think that this is going to set up an opportunity, especially if we can see some low volatility, maybe some compression and a breakout and a gap up off like CPI, or maybe some exhaustion into opex, and that kind of catalyzes something. But I think this is going to be a good short on September positioning, because realistically, I think we can build out the short exposure this week with the expiration coming up and capitalize on a move down to 51.32 and then 50.82. I think it's completely justifiable if we can have an objective risk at this gap being filled. We have a really ugly 4-hour and hourly look where there's not really an aggressive buyer and there's highs being sold off, with this stemming off of a previous support that initially got a very weak follow through off of that bid, off of that very large bid. And I don't know if this is going to be any different. We have a lot of individual names looking very poorly. We do have an anomaly on the weekly print, but paying attention to where that volume comes in at is pretty important. We have the same kind of thing on JPM, breakout to 300, the exhaustion, the notable footprint last week, the inside bar put in on a week like this, where we still have the remainder of the gap to be filled. Similar, not even similar to Goldman Sachs. We have a weekly resistance at 726. We have a new week opening gap to be filled from the week of the 30th. And we're really not seeing any aggressiveness behind this bid, and a lot of volume coming on that Tuesday print. Schwab, very similar, right? Filling the gap from the first. We still have a earnings gap to fill down to 93, and this is all happening on a higher time frame distribution above the all-time highs, where we put in a notable footprint following the earnings report. Visa is very similar as well. This didn't even draw into the gap from June, where we saw a 5% decline, and then another falling 5% decline that Wednesday, June 18th, right? This is MasterCard, we're getting slammed, and it makes a lot of sense as to why. But not really much of an edge on here. MasterCard, I wouldn't mind if we even filled this gap. The failure at the earnings report high from January is pretty appealing as well. But a lot of these names have gaps to fill below and have been developing pretty ugly looks, weekly and daily wise. No clean structure on the majority of them. But we're now potentially, right, and potentially is the key word here, developing what is looking like a lower high on financials within these gaps. Obviously, only time will tell. We have like a MasterCard where we're seeing a bid in this progression gap that could revert into this August 1st gap still. Same thing with kind of Wells Fargo on these kind of anomaly prints. So if this doesn't work out, I honestly would not be surprised. But this is a top watch of mine going into this week and post expiration, just because of the fact that we're potentially developing what looks like a lower high, right? um, as far as just daily and hourly structure. But that's a top focus of mine. Obviously, MAG saw the aggressive decline, and then I thought, we could see this fade within the gap, but we continue to see a breakout to new highs. I'm not super concerned. We still haven't matched the volume put in on this print, and once again, a very ugly daily candle, a daily price action on Friday's print, right, where we have all the highs just getting sold. So something I'm going to continue to focus on is mags. I really do like XLE right now. I've talked about this, the consolidation and compression and the lack of higher highs sold off. Zom's my favorite look, right? We have a lot of an aggressive move that happened late May, early June, sparking this rally into late June, where we see the decline on the 23rd and the pop on the tech equity and a lot of those names. But then we don't really see a lot of clean follow through after, right? We see the subsequent exhaustion, the really easy leg, the stall again at these highs, an attempt at a higher low, a stall put in within this bear gap. And then we continue to decline into these earnings reports on financials where we're continuing to hold this bull gap, and we continue to see kind of anomaly prints pour in. And Zom's my favorite look just because we've tested this gap low twice, and we still have the gap to fill at 94, and an underperformer relative to that gap in April off of Liberation Day. Um, but we see um, the lows kind of being established, the lower lows being soaked, right? We see a very aggressive and imbalanced move and a notable seller, the subsequent exhaustion, the clean leg, the failure within this imbalanced print, sell off, and then this massive capitulation on the 18th, where we see a massive influx of volume, subsequent exhaustion, a leg stem from that, and then a breakdown off of and into the report, where we see this anomaly print poured in on Tuesday, and it's happening within a pivotal spot, right? And it's happening within this gap fill, the golden pocket, and so you can take a commons trade with about 2% risk for 7.5 to 11% reward, and wait for an options opportunity to develop. This is a top long side focus of mine going forward. As far as a sector that's having some reversion left, right? That's all you're kind of looking at here. CVX is kind of similar with the compression following this clean pop. We have 4 inside weeks closing within the confines of the week of the July 7th print, but not anything that I touch as far as structure and as far as reward potential here. I like Zom a little bit better, but we're kind of holding this progression gap. Do we see it absorbed? We see the breakout. We see this massive footprint on the 18th, which is a little weird, but then we see that kind of digested, and then a higher low attempt at this gap with the subsequent exhaustion following the report. I don't mind that. I don't mind Oxy as well, right? We have a lot of compression here, developing relatively appealing structure on a weekly chart. That's not my favorite daily look. VLO was a really clean long in May and then into July, but this was an outperformer overall, right? As far as 50% up from all April lows. XLE was only up 20. So it's not surprising that this kind of got hit a little bit more aggressively. This was a really good long on here, and then we begin to kind of rally aggressively into some gaps that were filled above, and put in a unappealing kind of sequence as far as the breakdown after. I mean, it was decent with this inside week, and then we lead into the report. We fail to hold the progressive higher low, where we had previously seen a buyer, and just continue to break down a little bit lower. So not really a focus on my watch list. ConocoPhillips is kind of similar to Oxy and CVX with the compression, but the lack of lower lows being bid is just unappealing to me. And Marathon, this was an outperformer as well that's kind of breaking down a little bit. But these were underperformers overall when you think about the climaxes being built out into April following the April 2024 top that was put in, right? We never saw a clean leg on a lot of these VLO and MPC and Phillips 66 charts, but they outperform, and now we're kind of seeing the rotation back into the underperforming names. Schlumberg is a really underperforming energy name, but I don't have such a clear edge on this quite yet. That's XLE. I like XLE Commons, Zom specifically. XLP with a 3% week. And this right here is a big time red flag for the risk on equity. The outperformance of a sector like this that has been relatively underperforming but really compressed and really looking good when there's no red flags in terms of sellers getting aggressive legs, and it's more or less a notable buyer underneath here, but no true character change, right? And we see a really clean move, 3% on the week, like 4% off of the lows of last week. And ideally, what we can see here is a path of least resistance through this 83 spot and the character change within this chart. That'll be something I pay a lot of attention to. Don't really like a lot of these names long, minus Pep. Like I said, Pep was really clean off of the 2021 lows, a 15% rally following the climax is built out. But naturally, a name like this, moving that quick, is going to have some digestion necessary, right? And that's what we see. We see a really clean initial sweep of the gap, pop, stall, breakdown on relatively lower volume into this July 28th print. A nice pop, but no true bid backing it, and then kind of increased volume in the following session. So you can infer here that we're most likely going to sweep the peg, right? Because it's all simple supply and demand. There's not a large enough bid here. There's a larger seller after this move, and we have to draw to an area where there's a larger amount of demand and wipe some of the supply out of this range. And that's exactly what we do. We see a massive capitulation on the 31st. A lot of hands change this day. And then we see the subsequent selling or exhaustion and a really clean rally from, $7, right? So now we're just kind of looking for a higher low stemming off of 146, and then this can potentially push up to I don't really have such a clear target. I mean, 150 psych would be pretty appealing, in my opinion, something like that. So this will be something that I pay attention to for an options position. A really good commons trade down here, cover some into the report and catch the continuation. I wouldn't necessarily bid commons on this again. I would more or less profit roll that profit from the commons exposure into an options position when it's pretty optimal, which I think is going to be developing soon with this gap sweep and this kind of change of hands and shakeout. Procter Gamble in a gap fill from 2024. Coke looking relatively clean following the reversion, and like I said, the underperformance of this name, right? We have digested this move aggressively and are seeing climaxes built out in a defense of this massive reversal where it's opened up and reversed 9% in a week, failed at the previous all-time highs. So that's a good watch. MO is a pretty clean, consolidated chart with that kind of massive footprint that shook out a lot of people, shook out a lot of longs, changed the hands, and based the progression gap where May 12th, very pivotal, like I said, that day right there. And we see the continuation of the report, the kind of flush, the aggressive influx of liquidity, and we see that range wiped in a rally into this gap. But not really much else I see in a lot of these names that are really appealing to me. A decent, good-looking chart is the Kraft Heinz Weekly, but this is a pretty speculative long for the time being. SMH, right? We continue to build out a range on SMH at these all-time highs above 283. This is now our 6th daily test. All of them resulting in very exhaustive prints and very aggressive sellers off these gap ups. Exhibit A, Exhibit B, Exhibit C, Exhibit A, Exhibit B, Exhibit C. But nothing notable yet. I just want to see 283 cracked. We have a lot of red flags in the semiconductor space, in my opinion. If we go ahead and look at a lot of these names, TSM, like I said, we had this gap to fill from the 15th. We drew into it this week. We see the kind of notable bid and exhaustion, a gap up on the Thursday print where we're continuing to fade at this earnings candle. And there's a lot of volume backing this hourly print on TSM as far as a notable seller. But there's nothing clear on the structure quite yet there. This got beat off is crazy. Pause. Beat up off the report. I gotta chill. Marvell, I don't really like this name a lot. AVGO continuing to build out climaxes at the highs. Intel got slammed off the report. I don't really have an edge there. MU and Lam Research, I just look back and these were so nice, but it's so hard to speculate that this is going to happen, especially after a 27% decline in a week. But these could potentially still revert a little bit. We could potentially be finding our kind of jump across the creek, whatever you want to call it. Just our higher low. There's notable bids throughout the entirety of these gaps getting bid up, and a really clean pop on Friday. So this is something that you could definitely look at for some continuation to 140 on commons. And same with Lamb Research, the floor built out at 72, the reversion trade, the higher low in the May 12th gap, and we now kind of reclaim this previous gap where we saw a notable seller and potentially pushing this 107 spot. So, I mean, honestly, if you want to look at this for a path of least resistance, 1, 2, 3, this is our fourth test of this gap. The report saw a notable buyer. We find a higher low after the gap fill. We continue gap up and put in a 6% week almost. So that's not a bad look either. Other than that, there's not really too much I'm interested in as far as like individual ETFs. ARKK with an inside week, no true bid at all. I mean, this is very gross in my opinion, but I don't really have much of a need to trade this personally. UBXY put in the highest volume ever on the 1st, following the highest volume ever on the 12th or 13th of June. God damn it. This is a really ugly look, and I'm really confident that we see something come out of this, but it just has to wait, right? Like I said, massive VIX spike in April 4th. Things are going to need a little bit of time to develop, and we have the expiration date at the 20th, and we have the expiration date for opex on the 15th. NVIDIA, obviously we saw the 7% decline from peak to trough of last week. The draw and fill of this gap from the 24th, and we see the kind of 2-day inside bar pattern, gap up, failure at the highs, and inside bar to close out the week, right? This is a very ugly weekly candle closure. Obviously, we don't put in any aggressive continuation from that. But an inside week like this with, it's just an auction. You have to understand how we need to see these campaigns build out. We need to see those hands change, and that's exactly what we're seeing. We started to build out a range. We see a really clean leg, a really weak rally, a notable weekly footprint, and then the continued lack of follow through from a bid, but no clear structure to short yet on options. This is all very gross, and I'm still pretty confident in the short side. AMD with the hanging man weekly look. This is abysmal. The highest volume since the January 2024 report that began that distribution in the March 8th, where we declined from $225 all the way to $75. This is a really ugly look on a weekly candle closure, following this like parabolic burst, the breakdown, the lower high into the report. We're now failing the peg. I don't have an edge on this personally, but it's a really notable sequence when we're seeing like AMD put in a weekly candle closure like this after the rally and the run that it's had. Apple. This is one that I wanted to discuss, right? So I don't want to say I got faked out on the report. I wanted 224, but this report, this candle right here it happens in such a way off of a report and at such a point that I'm not surprised that we rallied, 15% from this. I'm a little surprised that we get this continuation, but I talked about why this would be a path of least resistance setup. This could have been a two-way trade, and I wouldn't have been upset with taking a long position. When this report gaps up and fades that 213 spot from April 14th, where we had 1, 2, 3, 4. This is like our fifth weekly test of this gap, low of the gap. We see a lot happen off that. We see a lot of supply that could be potentially absorbed. We see that seller potentially be wiped when you think about it in terms of just supply and demand, that all these daily tests on this gap and a seller seeing no follow through in this report, sparking a lot of selling that could be absorbed. It's not surprising. And then we bid the gap from the following weekly gap up, and we see the pop 5% day on Wednesday, continuation on a gap, and then this massive footprint, not even footprint, hourly footprint on the 8th, right? And so as of now, this is still short side focus. We're still potentially putting in a weekly last point of supply. This is a massive influx of volume on a 15% rally. Not surprised that this was a path of least resistance, but this could still build out a weekly sweep. This could still put in a lower high. This is still short side focus. I don't have any edge here yet. I need a character change. Looking for 224. If that happened off the report, it would be probably a little bit of a different story. But for now, this range was wiped. We saw that buyer or that seller absorbed, and we see the rally to a larger amount of supply. Just maybe going to be this gap, maybe going to be these 2024 July highs. I wouldn't be surprised. This is still a top focus for me, though, going forward as a short side trade. Tesla, the weekly chart on Tesla doesn't look bad. maybe for a commons position, but I don't like how these gaps continue to these gap downs continue to occur, and we really don't see aggressively clean follow through, right? We see this gap down, the little bit of a pop into the delivery numbers, another gap down, a 7% decline, a weak rally into the report where we attempt to find a higher low, a stall in the gap, take out those lows, right? And then get the continuation this week to fill the full earnings gap. This could be a long side focus going forward. I need to see something better. I don't really like commons. The commons were clean here and here into this kind of failed breakout. But we're still seeing climaxes built out. We're still seeing sellers, like we're still seeing gap downs that are getting bid. But there's nothing like super clean about this chart quite yet. There's nothing like super clean about this chart quite yet, if I'm being completely honest. As far as like long exposure on commons or options, I don't really have like a want to long this on commons or options unless it's like a longer term perspective to 400. But I do think that this can and potentially could like outperform as far as to 400 bucks before this sells off. I wouldn't be surprised. This is a lot of consolidation following an aggressive like capitulation and a nice 30% reversal where we're continuing to see notable buyers show their hands. Just the structure isn't really clear yet for me, I guess you could say. I do think that this could revert to 400, but I don't want to have a long position on this quite yet. A path of least resistance through this could spark a move to 360 is what I would potentially be watching. Meta, little inside week, not surprised. We see a gap up and that peg or that gap be kind of based, but all happening off a really ugly candle on the report. Same with Microsoft. Actually was a little bit of a good decent short in the Monday gap on Tuesday above this Friday high if you do take that exposure, but not really the cleanest look. I'd rather position in SPY and be a little bit more patient for a cleaner move. Google, I don't like this long anymore. Doesn't really look that clean following the report, but we're now reverting to the full February gap fill. It's not a surprise. That's aligning with my conviction short side, and I do think that, the long position down here, right here, underneath that 180 spot was pretty nice. And then we rally into the report and we see a notable seller, and it's just not a good look for me anymore alongside. But this reverting, I don't really care too much about the extra 3%, 4 or 5%. But this reverting to the full gap fill is very bearish, and I don't really care too much about Amazon. So other than that, I don't really have too much of a focus. UNH is still long on longer term commons, back to 330s to 380. I discussed this why I wasn't a fan of this in here, and I wanted these lows taken out, and we get a massive capitulation and a nice reversal. But this could be developing an options position, because what happens when we take out these lows is we see this massive kind of capitulation, right? All this selling and these hands potentially changing. And what stems off of that is a really clean pop on Tuesday and a higher low that's found, right? And so we know that there's a lot of selling that happened that was absorbed, and we see a really clean fall through from a bid on a 4% day and like a 10% rally, 8% rally from those lows of that Friday print. We then put in three inside bars essentially closing within the confines of this print on lower volume and lack of aggressiveness from this seller, right? And a notable kind of clean 4-hour look. So this is potentially a watch. I want to see where we open up. If we can base 249, I think this could push to 260. Like this little gap that we have unfilled from the 31st would be a good clean target for me. Personally, on a shorter term, couple weeks out options position, I don't mind that exposure right there. But that's probably all I'd look for as far as an options position, right? Shares wise, I like this up to the 300s, but options, this would be just a sweep of these lows, a fake out, hands changing, a clean pop, volume, harmony kind of lining up, and then a reclaim of 249 would potentially push this, $10, 4 or 5% on like September exposure. I don't mind this at all. Other than that, there's not much I like. We have Nike, still want this to sweep the peg. This could still be a good commons trade up to 90 on a shorter term perspective. But if we're continuing to see the exhaustion and the need, in my opinion, to draw into this 15% gap that we left off the report. Palantir, I wanted a good footprint off this report. I think we're potentially going to see something like February where we see the gap up, the peak bullishness, a lot of people getting long on Palantir, 2,000% from the lows at $7, and we continue to see the rally where there's diminishing volume into ideally where a broader market top is put in, like the market top was put in February, that sparked a 50% decline in this name, right? 47% decline from February into April, right? I think the same thing can happen here. I think this report can trap a lot of people. I think we can see that continued exhaustion. All you need is a footprint and a lower high. I think this can revert 50% again down to 93. PAW, nothing really happened here besides continuation lower, but I wouldn't want to continue to short the whole here. MSTR and coin still look like shit, but nothing I really have as far as an edge on these names. So that's it for me, right? My focuses are SPY January exposure, with still leaving room to add because you want to wait until we have a full, clean, notable top put in, and then a September position. Right? If you want to start adding in here in the Thursday and then leave some room to add in the CPI or opex, that's probably pretty viable. I don't think justifying full size here over the weekend is notably optimal, especially with no leeway. You can't really catch any leeway here over the weekend. But I do think this is going to make a move. I think 621.72 to 626 is a clean target within the month, and then I think 618 to 613 can as well be met into August. That's my main focus options wise. Another options focus of mine will be 52.37 down to 50.82 on XLF on September exposure, and that's pretty much my options focuses summed up, right? UNH is an options position I would look at for a long off of 249 to 260. That's a position I don't really have too much need to trade, but it definitely is setting something up. And then PEP as well is going to be a focus long options wise if we can get some kind of clean consolidation off of here, maybe a 146 down to 142, and then you can long this back to 146 to 150 as far as like a progression gap being reclaimed here from the first or from the 31st. That would be pretty appealing to me, especially if it's like discounted range, right? If that can be based, I can set up a really clean move. And then ZOM Commons on a medium term perspective, nothing like long term, but more or less a pretty objective risk within this gap and this golden pocket for a draw to these full gap fills on the energy sector. So that's pretty much it. Just a quick little update, quick little scan of what happened and what my focuses are and where I want to put my money in the stock market right now and the derivatives market, and why my conviction has not been lost. I said before that this is a longer and higher time frame perspective, and you're gonna have to be patient and wait to take ads as topping out is definitely a process. And it's shown. It has shown to me that nothing has been appealing. I still think we decline into Q4, but we have to be patient, right? I have my thought process and thesis behind different time frames, and I understand how I want to execute on those specifically as far as the January position and the September position and why I think that's optimal. But like I said, you have to be patient and you have to wait and I mean that's standing true for now. But that's my focuses. Earnings reports. Do we have any crazy notable reports? Next week we have CPI Tuesday, PPI Thursday, opex on Friday. I think that can definitely catalyze something depending on where we open up at. Like if we can stay a little bit flat, maybe a gap fade of the weekly high, weekly external high, 637 to 640 to begin, or not begin the week necessarily, maybe just off of CPI. So I guess to begin the week, but we can see a decline catalyzed by PPI to 626 to 621. That would not be anything I would be surprised by, especially because of all the liquidity built up now at this 640 spot. It can definitely spark a lot of buying that can be absorbed in terms of like changing of hands above these highs, and especially off like a cold CPI print, this can spark a move down to this gap and potentially even a little bit lower. no reports I see that I really care about too much. So yeah, that's pretty much it. Good luck, have fun, and pay attention to data and structure and timing.